Bitcoin is waking up and it is time to pay attention, because if this run continues in the way it's looking like it could, then this is potentially a life-changing opportunity in the market. Remember, these horrific crashes are part of the way that crypto grows and thrives. However, these crashes also typically wipe out most retail traders, yet they also offer some of the most advantageous entries into the market that you could ever get. Remember, crypto went absolutely parabolic starting in January, and many big money traders did not have a chance to enter at what felt like comfortable prices. That's right, when things are up 300% in a matter of days, most educated traders don't jump in. But from the rubble, this crypto market can now rebuild, and good traders have the opportunity to get in at bargain basement discount prices on so many projects. And for that reason, if this continues, these might be golden opportunities for you. If you guys are excited to hear about all the bullish news across the market and how I'm viewing the next few days and weeks and how I'm allocating my capital, then go ahead, destroy that like button. Remember, each and every comment on this video is entered to win your own hardware wallet. As always, there are scammers in the comments pretending to be me. Don't fall for it. And of course, with that said, let's dive in. So as you can see right now, Bitcoin is working its way up against this 200-day exponential moving average. Now, the 200 EMA is a very significant number and typically marks the bearish versus bullish trend. When we are bullish, we are usually bouncing off above the 200 EMA, and when we are bearish, we are usually under the 200 EMA. And for this reason, this is somewhat of a line in the sand between a bull and a bear market. Now, what we're seeing here is that the first rejection off the 200-day EMA was actually a negative 25% candle, but we just got a rejection of a 2% candle, meaning that there's an argument here that we could have a weakening EMA, which means that if we weaken this resistance and eventually bust through it, we should see some nice upward price action. Now, of course, we've talked about this several times here on the channel, and I've tweeted about this many, many times over the past few weeks, which is that, of course, above 42, there's some room to rip, and it should rip all the way up to about 47 or something, the mid-high 40s if we get above 42. Now, we're kind of tickling these numbers. We haven't quite gotten through them, but I am fairly confident that we will see this play out. And just because this happens doesn't mean that we're full bull again. Though it will be nice and more comfortable to have some support below us. The reality is the big test where we can go ahead and flip all of our jet engines back on again is above 50. So if you're in a position where you really need to preserve capital, again, just my opinion, not financial advice, do your own research here, but if you're in a position where you really need to preserve capital, losing a few percent, 20%, 30% from here would be devastating for you and your portfolio, then you should be in a preservation strategy. That's what I would be doing if I was in that position. Now, if you have a bit of a more risk on portfolio, if you've been in the crypto market since early 2020 or before then you probably have some really big gains that you're already sitting on. If you can afford to allocate capital in these more risky sort of 50-50 type times, then you're going to get way better entries. There are so many coins that have not taken off their lows. They're just sitting at their rock bottom lows from this dip. So if Bitcoin's able to overcome the overhead resistance here at 42 and then eventually close some candles over 50, then it would be absolutely go time, in my opinion, to start getting back into altcoins, which will most certainly lag behind those moves. And for that reason, the risk reward ratio here is getting better for the altcoins, but it's still quite risky. So just know that there is quite a significant likelihood we could go down, or that we might just range between 30 and 50K for a few months, which again would not be unhealthy to accumulate and consolidate there before moving higher, so that we have some serious stability there. And that would really reinforce that 30K level as, maybe the bottom for Bitcoin for the foreseeable future. That would be really, really good. And again, remember, there's over $1 trillion in liquidity in this market. There's still a lot of money to move around and for projects to thrive on top of. We have, again, Michael Saylor in MicroStrategy adding another $1 billion in debt here, or in sales of common stock here to buy Bitcoin. Michael Saylor's conviction for Bitcoin potentially outstrips many even hardcore BTC maxis here in the crowd. It's amazing here to see what he's doing. And again, this is the trend, is that big money bags and big publicly traded companies and asset managers are still allocating a ton of money to Bitcoin, and they haven't gotten in yet. Now, this is backed up again by research here showing that hedge funds expect to hold $312 billion in crypto by 2026. That is, 1 in 6 hedge funds wants to allocate over 10% of their assets to crypto, which for quick math for you guys, 1 divided by 6 here, 1/6 of all asset managers would be, 16% of all assets under management. And then, 10% of those assets would be, 1.6%. We're looking at 1.6% of sort of managed assets by wealth managers, by asset managers looking to come into crypto. That's a significant chunk of change here. What people need to understand is that big money bags didn't move first on this wave. You had Michael Saylor, then you had the Elon Musk news and Tesla news, but you didn't have these old slow moving money bags really allocate yet. And those bags move very slowly and look for ideal entries. They don't just FOMO into things. And so this dip, I believe, will be looked back at as a chance for bigger institutional buyers to get in at what felt like more palatable prices, especially as things resolve to the upside again. People will feel even more comfortable that Bitcoin holds and grows in its value prop. And so this is a very important moment. And I think the institutional buying frenzy has not been completed, though a lot of people feel like that wave has passed. I do believe that it's still ongoing and that a lot of these big money bags are still trying to find their way in. So this dip may have presented just the perfect opportunity for these guys that they didn't have during the mania phase of December, January, February. We also have reports that Goldman Sachs is going to offer Ethereum futures. Just yet another notch on the belt here for Ethereum. Obviously, Ethereum is the next asset that's going to be adopted for institutional buyers after Bitcoin. Remember, we're probably, 2% or 3% along the road to get institutions to fully adopt and invest in Bitcoin. We're probably a fraction of a percent on the way for Ethereum. And so you just have to understand how many money bags still haven't allocated to these assets yet. And that's why there is a huge opportunity here just by sitting in the top 2 coins. And yet more bullish news for DeFi. Remember, I've been calling for DeFi Summer 2.0. I still believe that that is the most likely scenario, as DeFi is an absolute revolution on the financial system, allowing for these kinds of yields to be generated. It's a fantastic innovation. That's why you see Mark Cuban jumping in. That's why you see Mr. Wonderful jumping in. That's why you see all of the big brains in crypto jumping in and staying in. There's still so much going on in DeFi, and this Swiss bank is just adding DeFi now for its customers. And I really think this meme says it all, because you have institutional investors looking at Ethereum, but really when you're buying into and supporting Ethereum, you're buying into and supporting DeFi, because a lot of DeFi stems from Ethereum as a base asset. Look at MakerDAO as one of the biggest DeFi protocols, basing its DAI stablecoin off of Ethereum collateralization. There's a lot going on here, but just know DeFi is going to thrive, especially as Ethereum continues to thrive, which I am very bullish on both of these sectors for the short, mid, and long term. And on DeFi news, we have Curve V2 launching, Alchemix launching ETH vaults, Margin Swap launching on Polygon, and more. Again, it's very important to track the updates in DeFi land, as I think that this is one of the most important sectors. I'll just say it again and again that you should be tracking DeFi, because this is what's really going to radically transform these early whale investors. Of course, I also believe very strongly in the NFT space. I think these two are the most interesting sectors to watch. And then probably after that, you have like the D-Web space. We also have Fantom announcing that Curve finance pools are coming to Fantom on Thursday. This is a fantastic innovation. Curve is one of the most interesting innovations in DeFi, and Fantom is one of the most interesting L2s or L1s that are EVM compatible. Big fan of Fantom, big fan of Curve. So this is a great partnership. And as far as macro news, it's always important to keep your eyes on inflation, as fundamentally Bitcoin was built as an inflation hedge, a bet against the current monetary policy. And what we have is the official inflation numbers jumping to 6.6% in May, the largest year-over-year increase in history. And this includes war periods like World War II, where there was massive inflation and massive money printing. So this just shows you our inflation, even the official inflation numbers, are absolutely out of control. And in some very interesting NFT news, we have the US Space Force launching an NFT line with Eternity. I find this to be very, very interesting. Obviously, who doesn't love space here in crypto land? So big shout out to Eternity for licensing the US Space Force. And they're starting with Neil Armstrong's historic achievements on the Immutable Ledger. So there's going to be some Neil Armstrong NFTs. Come on, all you moon boys. Who doesn't like the first man on the moon's NFTs? Anyway, I thought this was cool and definitely worth a shout out. Good work to Nick and Eternity Chain. We also have the World Wide Web's original source code being auctioned as an NFT by Tim Berners-Lee. This is again a very interesting piece of internet history, kind of like Jack Dorsey's first tweet. You have this www source code, which is of course the foundation of our modern internet. So very interesting to see these, I guess, internet pieces of history getting auctioned off in the only format that they can really have. How else can you possess the source code as an asset except with an NFT? I think this is a really interesting use case. I'm about it, I support it, and I'm very interested to see what this actually goes for. It's important to realize, like I said on yesterday's episode, the NFT buying community doesn't necessarily stop buying because the markets have crashed, but you're looking at the actual trading markets for fungible tokens, and those go through ebbs and waves that almost exactly parallel Bitcoin's bullishness. Whereas you look at the NFT sector and it really seems to be decoupling in some ways. Obviously, asset prices will inflate and deflate based on how good and how healthy the crypto markets are. There's going to be more money and more frivolity when the market is way up, like we saw in February. But what we're seeing is that things like Bored Ape Yacht Club and CryptoPunks and sort of nuts and bolts NFTs that have meaning to people are still doing incredibly well. So this is exciting to see that the NFT market, although it is quote unquote dead, is still very much thriving, as we saw with the Sotheby's $12 million NFT sale just a few days ago, as well as the upcoming Christie's auction for Fuocious. It seems like NFT art and NFT auctions are very much alive and well. And speaking of this, you have Burberry launching its first NFTs as in-game clothing for a game called Blankos by Mythical Games. Mythical Games was funded by EOS back in the day and released a video game called Blankos Block Party. And so it's cool to see these brands doing crossover stuff, especially as NFTs are used in games. I support all this, and I'm very excited because I believe, as I've said many times, that one good game will bring in the first billion users to the blockchain. And I still believe that. Again, NFT news I'm going to continue covering because I think it's so important to keep your eye on this sector. And finally, we have MStable partnering with Insurace. Now, Insurace is an interesting project. I'm very long and bullish on the insurance sector, especially as DeFi gets bullish again. You need insurance to lock up all these funds, and the big money managers will demand it. So Insurace being a smaller insurance protocol that actually has insurance cover available to be purchased, and MStable here being a protocol that I'm actually a fan of, and I've made a video on here on the channel. MStable and Insurace partnering could be very bullish for this low cap insurance gem. Something to keep on your radar. Again, it's not going to perform if the market doesn't perform, but with the return of DeFi summer, something like an Insurace, along with projects like Bridge Mutual, BMI, those are projects that I'm very excited to be holding with the return of the market. For clarification, I do not hold any Insurace in my personal portfolio, but I do hold quite a bit of BMI Bridge Mutual. So as the market ebbs and flows and grinds its way back up into a bullish posturing, hopefully over the next few days and weeks, what we can see is a re-enlivening and a huge fire sale discount on some of the best assets in the space. I do believe that if we're able to turn bullish again, these entries will have changed several, if not many lives, allowing for people to rewind the sands of time just a few weeks to get cheap entries into projects that have tremendous narrative and will turn bullish once again. Now, I do believe and I hope that the speculative mania that led to the collapse, the dog coin manias, and all of the other meme coins that seem to be crowd favorites here in crypto land will subside somewhat as we return to a bullish market, because in the end, crypto is here to improve people's lives. Crypto is here to offer our societies decentralization as an option, the ability for communities and crowds to control their own destinies in the tech world with finance, with voting, economics, governance. The idea here is power to the edges and increased prosperity and liberty for people across the world. Now, meme coins, they might make you some money, but they don't really accomplish any of that. So I'm beyond excited to see what might happen with a return back to fundamentals that I think everybody's rooting for here in crypto land. Let me know if you guys enjoyed this. If you got some value out of it, please go ahead, destroy that like button. Remember, each and every comment on this video is entered to win your own hardware wallet. We'll give it away this week here on the channel. Make sure you get your comments in. As always, I thank you guys so much for watching. If you want more content like this, make sure you subscribe and put that bell notification on. That way you're made aware whenever I put out new videos. As always, my name's Elio Trades. You can find me on Twitter. Link is in the description, and I'll see you very soon on the next episode.